It's time to do business again. It's 55 minutes. That's what we have to go around the world of business. And here's what we have prepared for you. Nigeria is now a member or a shareholder at European Bank for Reconstruction and Development. And Zimbabwe nuclear energy plants have become public. We'll share that with you in a bit. Utility theft is not just in Nigeria. Ethiopia has some major losses on this. Welcome to the program. I'm Ini John McCoy. We'll start from the global space. As usual, today we go to gold. It edged lower on Wednesday as the firmer U.S. dollar and Treasury yields pressured the yellow metal, while markets continue to track the possible impact of fresh U.S. tariffs. Look at the numbers. For now, 0.3% down. That's for spot gold, but it's hit 2,909. We know that yesterday about this time it was 2,800, but it's gone above that. So after rising nearly 1% on Tuesday, while U.S. gold futures were steady at $2,920.70, benchmark 10-year U.S. Treasury yield rebounded from an over 4-month low that it hit in the previous session, decreasing non-yielding gold's appeal, while the dollar index also firm. The move lower has been very modest so far in trade, and probably they say that markets are digesting the prior day's sharper rally than any catalyst has only just emerged. And then looking at other metals today, of course we know all of this is connected to President Donald Trump and the tariff issue. Spot silver is just a little bit changed at $31.93 an ounce, and platinum slipped 0.2% to $958.41. Palladium added 0.4% to $945.97. Now we move to the oil space and see pretty much the same factor driving oil sentiment. At this time, it fell for a third session as plans by major producers to raise output in April, that's OPEC Plus, combined with concerns about the U.S. tariff on Canada, Mexico, and China, that it may slow down economic and fuel demand growth. That has hampered investor sentiment. So we see that it's 0.7% in the red at $70.54. WTI is also down. In fact, deeper than that, 1.25 at $67.41 per ounce. And, well, the tariff and also the expectation that perhaps President Donald Trump might be a bit softer when it comes to the 25% on Canada and Mexico. These are weighed by investors, and we see it also sipping into the price levels. And then we come to Nigeria, where Nigeria is officially a member of the European Bank for Reconstruction and Development. Nigeria is the 77th shareholder, marking a significant milestone in the country's economic trajectory. In April 2024, Nigeria submitted its application to join the bank, which the Ebrd's Board of Governors approved in May 2024. This membership follows a pivotal decision made at the Ebrd's 2023 annual meeting in Samarkand, where an amendment to the agreement establishing the bank was approved. The amendment permits the gradual expansion of the bank's operations to sub-Saharan Africa and Iraq, subject to formal ratification by the majority of the bank's shareholders. Now, Seplat Energy has opened new tabs to invest up to $320 million in new wells and infrastructure this year, and is aiming to more than double its oil outputs to as much as 140,000 barrels per day following its acquisition of ExxonMobil's Nigerian assets. The company secured government consent last October to acquire 40% of 4 oil mining leases and associated infrastructure, including the Kwaibo Export Terminal and 51% of the Bonny River Natural Gas Liquids Recovery Plant that was previously owned by Mobile Producing Nigeria Limited, Exxon's local unit. Now, this acquisition is a large part of the projected production increase, which could take the company's onshore and shallow water oil output from an average of 48,618 barrels per day, and that was at the level last year, to about 140,000 barrels per day, with the former Exxon opens new TARB assets contributing 60%. And this year they say they will focus on reopening previous shut-in wells in Sepnu, and then also alongside another full drilling campaign for onshore assets. And so we look forward to, an increased crude production in Nigeria, perhaps coming from them. Now, the Nigeria Economic Summit, they are looking also at the oil and gas sector. And we've seen a lot of movement in that area. We've seen Nigeria's refining capacity resurrected or improved in the year 2024. But this also comes with some consequences. That was the conversation during Business Morning today.
Now we're getting to a place where the interplay, the competition, okay, among these players, Dangote, NNPC in particular, and import, is going to lead to a situation where we'll have something that is close to an efficient price in the industry. And with that, you're then going to have two possibilities. One possibility is that the producers who are not efficient, okay, may either exit the industry, you have a situation where you have more people, okay, more players coming, and I foresee more players are going to come in. Why? Because one, you have a situation where the price is market determined, okay. Two, you have a situation where, some of the local producers, regional producers, are likely to set up modular refineries, okay, so as to ensure that they diversify their income base, okay, instead of just exporting. So they want to say, okay, look, let's take advantage of the domestic market. So a lot of investment will come into the downstream, and I think that is going to be good. The only concern that I have, and I think the regulators also have to be very, to be very careful about this, is to ensure that this competition is healthy.
Now, the Minister of State for Industry, Senator John Eno, says he is committed to assist women in small-scale businesses. He made the comments at a meeting organized in recognition of the upcoming International Women's Day for 2025, happening, we know it's March 8th, that's on Saturday. The ministers reiterated the government's efforts to ease financial access through the Bank of Industry and facilitate loans disbursement to micro and small enterprises in the country.
We need to have an industrial strategy that targets and focuses on women, and that is able to deliver on the kind of change that we're looking for. Deliver what I call inclusive, innovative, and intentional, results that harness the potentials of women. And I think that we can list these amongst about 3 or 4. We need to break down the barriers that limit access to financing, to infrastructure and to global markets. We need to break down those barriers. We need to create the right policies that recognize women as key drivers within the industrial manufacturing space. We need to build an ecosystem where it is not necessarily the gender, but the talent that gives rise to positioning that we find in the sector and in the industry. And that's why, for me, the Industrial Revolution Work Group represents the strategic engine, to drive that change.
Well, on the one hand, we're talking about industrialization. On the other, we're talking about marketing. After getting the product out, I guess it's marketing. That's why we're speaking with a tech product marketing professional who's right here in the studio. Oluwatoyin Mohammed. Hi, Mr. Mohammed. Good afternoon and welcome to the program.
Hi, good afternoon. It's really nice to be here.
Good to have you here. So, the minister there was just talking about International Women's Day, which is on Saturday.
Yeah.
I mean, let's celebrate ourselves with the women.
Absolutely.
Yeah, but when we look at your industry, which is fintech marketing and all of that, do you have a lot of female participation there?
Oh, yes, absolutely. I think even way beyond the fintech industry, I think in recent times the tech industry has a lot of female participants now, and it's a breath of fresh air because I mean, if we go back 10, 15 years ago, that wasn't exactly the case. You see a website developer, you see a tech product marketing person, a product manager. It's always the men. But now, go to any tech company, it's highly likely you're going to see women leading the charge, and also it's just really, really refreshing to see.
But what does it mean? Does it mean that women were getting educated all this while, or is it just the passion has gotten into the women, or is it because it's now very lucrative?
So I think for me, I would say perception, right? I think in the past, there was this perception people had about the tech space. Oh, it was very difficult. It was very, you had to be like a core engineering guru to get in. But over time, with a lot of information being available to people, and people being able to actually go online and learn, it became became more accessible. So right now, everyone just feels, okay, if I want to get into tech, if I want to become a developer or whatnot, I can just go on YouTube. I can go on Coursera, I can take courses, and I can, learn the ropes. So I think the perception has switched a little, and people now know that it is not as difficult as it used to look in the past.
What are some of the other trends that we see in the fintech marketing on the continent?
So at the moment, I think Nigeria and Africa at large, we are still, in as much as, yes, fintech has actually broken a lot of ground, I would say that we still have a huge population of unbanked and not exactly the most financially literate people, which is why a lot of fintechs are keen into the trend of actually trying to educate and bank the unbanked. So, I mean, I would explain. I worked on a product recently, and this product was a payments platform that was actually meant to have, people able to remit their micro pensions digitally. So, I mean, for a product like that, we know that when it comes to mandatory pensions, people who work 9 to 5s, they have access to their mandatory pensions. But people who don't have 9 to 5s, the regular market women, they were exempted from this. They didn't have any form of safety net. So we worked on the product, and that product made it so easy for, the unbanked, the people who don't exactly, quite a number of them don't even have bank accounts.
Do we know why it does seem, I mean, you would have thought that by now, this day and age, everybody has a bank account, everybody has a BVN and all of that. Do we know why it seems slow?
Yeah, I feel like the barrier for entry is still a bit high.
Really?
Yes.
Like which requirement? Because now you don't need money.
Yeah.
You understand, to open an account. The fintechs make it even easier.
Yes, the fintechs.
You can use your phones, and then
absolutely.
you don't need to go to any physical bank or anything like that. So what would have thought that?
So it's a work in progress, and it's better than it was a few years ago. As of right now, just like you said, the fintechs are doing a fantastic job of actually bridging that gap. Because, for example, before, if you want to open a bank account, whether you are a 75-year-old woman or whatever it is, you would have to leave your house to go to the bank. But now that is not the case. Unbanked people can easily go to the POS agents to even open an account. It is that straightforward now. So now that is still in progress. It is being done already, but it's still a work in progress, which is what I'm saying. It's where the fintechs are channeling their energy into right now. And I think in a year, 2 years, 5 years, we're definitely going to be much, much, much better than we are currently.
So this makes it difficult for someone like yourself when you talk about tech product marketing and all of that, because how do you reach these customers or potential customers if they are not anywhere in your space.
Yeah, so which is why the tech marketing space goes beyond just, trying to reach people through, the digital channels. You have to be ready to actually, do the legwork, which is what, I mean, agency marketing, agency banking is also a part of product marketing, right? I mean, trying to foster partnerships with foot soldiers. Now, these foot soldiers are people that the regular market women, market men have trust for. So it is then easy for them to go to these people, whether it's money they want to transfer, whether it's an account they want to open. These people are the ones that then get to do the footwork for people like us. We give them all of the everything they need, right? Everything they need to actually educate people to speak the language that these people actually understand. Everything will be provided to them, and they will be able to disseminate this information. So that is the tactic that we're still using. Of course, besides localizing brand messaging right now, brands that are putting out commercials on radio, on TV,
indigenous.
Exactly, trying to let these people know that, look, getting involved in actually, in financial services is not rocket science. The Azure that you people used to do back then, all of that has now been digitalized. So you're not doing anything different from what you used to do. We are just basically just modernizing that aspect for you. So, I mean, that is the way that we are going. And another key problem that we get to face is the trust problem, right?
Yeah, I wanted to ask you, because those women trust their jaw system. They see the individuals every day come and collect the 100 naira and the 200 naira, and when they need it, they talk to those people. But, your app can go, your app can go off, as your phone can crash, and, and all those risks, they actually challenge.
And I would even say that, even for the trust aspect of things, it's not limited to these people. I mean, for someone like myself, a lot of times, sometimes maybe I'm trying to move money from one app to another, and then the money gets stuck.
Yeah, it did happen this week with a major traditional bank.
Exactly. So that happens a lot. So where the marketing team or a product marketer will then come in to buffer that type of situation is to ensure that there is no communication gap. I mean, it's very important. We're talking about money. That is how to build trust, right? Ensuring that once there's an issue, the issue is communicated in the language that people understand. And when the customers are then trying to reach out, maybe via social media or whatnot, there are people on the other end answering them promptly, letting them know that there is no problem, your money is safe and intact. There's really not much you can do beyond that, right? And I feel like, to a large extent, we're actually moving in the right direction. Where we are now isn't where we were 5-10 years ago, to be very honest.
Yeah, so, that's obvious. But where do you see us in the next maybe 3 years, 5 years? You talked about communication now. Yeah. Perhaps there are more innovations that can be used for that to increase the trust and lead to more adoption. What innovations do you think can be introduced?
So, I mean, as of right now, I know that a lot of fintechs actually have partnerships in place with telcos, for example, to ensure that there are active USSD codes. Because at the end of the day, we talked about these unbanked people. Besides the fact that they are not that financially literate, there's also the economic situation of things that doesn't exactly have a lot of these people have access to digital hardware, that is, smartphones and the likes. But they still want to enjoy these services, right? So with partnerships like that, it's easy for them to, just use their USSD code to whether they want to transfer money or whatever it is with whatever phone So in that case, for the demography that are not the most digitally literate, that works perfectly for them.
What about costs? Because, I mean, the issue of bank charges, is coming up again.
I know. That is a bone that just never really leaves our necks, because I know that most of the fintechs, when they launched, they really tried. I mean, they tried to ensure that, you're making transfers, it's zero charges. Quite a number of them still do it right now. Some of them
with some conditions attached.
Yes, with some conditions attached. Yes, absolutely. But they've even had to infuse these conditions because the central bank has just placed some. So they just have to. But at the end of the day, I think no matter what the cost implication is, I think it's very important that brands are transparent with whatever cost implications there are to their customers. Because in my opinion, I feel like if, of course, we all know the way the economy is, we know the way the landscape of the country is. If a certain amount of money is being taken out of my money for certain reasons, and you guys are communicating, letting me know that, okay, it is not us, right? It is based on, our licensing, this and that. I think to a large extent it buffers, because at the end of the day, if you want to transfer money from Kano to Lagos, you cannot put your money in Ghana, must go and say, I want to go, and you definitely still need to transfer money. So if the charges, are still as minimal as they are, you just have to, work with it. But like I said, the fintechs have to constantly communicate that, okay, this is what's going on. At least that would build brand trust to a large extent.
All right, thank you so much for that. Oluwatoyin Mohammed, Tech Product Marketing Professional,
thank you
for sharing
so much.
those insights with us.
Thank you so much.
Let's take a break. When we come back, we'll head to the markets with Aniti Edit. Stay with us. Welcome back to watching Business Incorporated here on Channels Television. We head to the markets now. Aniti Edit has intraday numbers. Hi, Aniti.
Hi, good afternoon, Nini.
Good afternoon.
Yes, it's still the bearish trend, and remember
At the NGX.
At the NGX, and of course, look at the screen
and
there.
we lost the 107,000 level.
Exactly, it was just hanging by the thread yesterday, and of course, this is not really surprising because the market. Well, I would even tell you that this 106,000 points. It's not something that the market should wail about, because it's actually a high. So far for the year, the market is still around almost
in the positive.
Yes, it's in the positive, about 3.9%. So it's still fair enough to say yes. This a 0.25% pullback at intraday, and the market at
but Anita, the problem is that this profit taking seems to be taking too long.
Yes.
I mean, almost all through last week we had profit taking. We were in the red, and now we're in the middle of the week. And then in the new month, we haven't recorded any positive close in the month of March, or have we?
Well, we had just that's on that was just last week.
That's what I'm saying. In this month,
yes, so far
we haven't had any positive close.
Certainly not. We have the month to date, which is just about 4 trading days in the month of March, and it says a minus 0.9%. So.
So not looking good. We need to wake up
in the midst of earnings
and get the bull back into the market.
Yes, but I'm sure the cherry pickers, as well as the bulls, is most likely to return because of some other factors aside from the corporate earnings results.
All right.
Okay, so now let's get a bigger picture of intraday market numbers across most of the bourses around the African continent, like we were talking about. The Nigeria Stock Exchange All Share Index, which is at the close of Tuesday's trading session, about 345 billion naira was shaved off. That in naira terms, not in dollar terms. So, but so far the market is still in the positive terrain, like we mentioned earlier. And of course, at the same time, more earnings are still trickling into the market for the full year 2024 earnings. And then maybe at the end of this month, this quarter, when we go into a new quarter, we should be expecting first quarter 2025 results to be going into the market. But for now, the market is digesting the full year 2024 earnings reports, which is not having any positive effect at the moment on the market. Now, talk about the Johannesburg Stock Exchange, 1.35%. This is the lone gainer at intraday, 87, almost about 88,000 points there for that market all share index. And for the other two markets within the African continent, we see it also in the red. For the close of Tuesday's trading session, Nairobi Stock Exchange All Share Index down 1.17%, 131.04, and EGX30 down by 0.28% at intraday intraday trading activities. So that's a wrap for the markets on the African continent. Now let's talk more about the other side of the market on the domestic financial markets, which is the fixed income market. So yes, we know that so far, for the start of the week, the fixed income market is started with the FGN savings bond auction. And there are other developments which we'll be having our analysts to talk to us about it. So we have Matilda Adefalujo, investment research analyst with Meristem Securities, to give us details about that. Thank you for joining us, Matilda. I know, yes, I have quite a lot of questions for you, but I'm going to start first with the debt issuance calendar by the DMO. how is it affecting demand and supply dynamics in the FGM bond market when you look at the FGM savings bond auction which just kicked off this week?
Hi, good afternoon. Thanks for having me. So, I mean, the calendar does what the calendar does really. So it has the impact on supply, demand, and on the supply side, it outlines the volume and the tenor of bonds that is to be auctioned by the PMO. So we see sometimes increases, sometimes, and I mean, speaking specifically to the FGN savings bond, it's also outlined things like coupons. Then in terms of demand, investors are able to, especially market participants like pension funds, administrators, banks, different investors generally are able to now then plan and see on what tenor they are going to invest in. And I think the latest calendar that was released by PMO for the savings bond, we have coupon of 16.64% on 2-year savings bond and 17.64% on the 3-year savings bond. And basically, I would say that it's a government instrument, is risk-free and expected to, there is expected to be, increased level of participation, especially as investors still try to lock in funds or at least lock in rates at currently high levels, which is relative, given the fact that we've started to see interest rates, stock rates, yields generally in the fixed income space start to decline. So the calendar just, I mean, it's in line with general expectations, right? But when you now look on over to, bonds, I think there was the removal of the 30, I think 33s or 35 instruments, right? And this, I'll say that it came as a bit of surprise or shock to investors, but then it also generally explains that DMO, they're definitely trying to, as much as they can, manage their borrowing costs. So, I mean, in the markets, we've seen high level of participation on the currently available, that's the 29s and the 31. So these are the most traded bonds in the market.
Okay, all right, Matilda, yes, so now let me take you to the global space currently we have this tariff threat by US President Donald Trump, causing a lot of chaos around the markets. But now, how is the global economic factors influencing investors' confidence in Nigeria? Yes, Nigeria is not a country that will be affected by that tariff threat by US President Donald Trump. But how is it affecting investors' confidence in Nigeria's fixed income markets?
Well, I mean, for investors' decision to participate or invest anywhere, they're looking at different factors. Yes, there's the global space where they are considering expectations of, tariffs that are now in place. There is higher inflation because we've started to see inflationary pressures now start to, mount again in all of these advanced economies. But then looking at the specific country, that is Nigeria, that investors would want to invest in, you're looking at the macro, the fundamentals, you're looking at inflation, you're looking at interest rates, and you're looking at the achievable yields, right, that investors would get. And not just in isolation, you are comparing it with all of these other countries. So, I mean, it depends on individual investors, right? If investors do their comparison and then they see that it aligns with their investment strategy, right? I believe that the yields that are obtainable in Nigeria are still relatively high compared to what is obtainable in some sub-Saharan African markets, and even of course in the advanced economies. So there is that bit. There is also, we've started to see some level of increased participation, seeing yields go lower, prices of bonds are now higher now, right? So I mean, this just goes to show that the fundamentals, however they come, are now beginning to speak in our favor. So that's a major consideration that I believe that foreign investors would look at. But what is more important is that premium that they will be able to get, despite the fact that there is tariffs in place, which we expect that would lead to higher rates for them in their fixed income markets, which we start to see even gradually. But relatively, Nigeria is still offers relatively higher rates.
Okay, Matilda, I think we'll leave it there, and of course, I hope that tariff threat just stays where it is, and then Nigeria's investment climate continues to climb higher. So thank you so much for your time on the show.
Thank you for having me.
Matilda Adefalujo, investment research analyst with Meristem Securities. Okay, now let's talk about the Middle East markets. We see negative picture also printing there. If you can see that on the screen there, negative picture all across the board. Yesterday Dubai was in the green, but this time it's back in the red, 0.59%. Abu Dhabi also down 0.15%. Let's take a look at the Saudi Arabia and the Qatari Stock Exchange. Only Saudi Arabia, yesterday it was largely in the red, no thanks to that drop by Saudi Aramco, the country's state-owned oil company. But this time it's making a little bit of a comeback, 0.07%. Qatari Stock Exchange down 0.11% at intraday. Okay, so let's talk about the U.S. markets. The stock futures, they're jumping on the hope of a possible tariff compromise by U.S. President Donald Trump. It has dominated just 45 days in office. U.S. President Donald Trump has been making the markets to be kind of nervous, no thanks to the tariff threat. Yes, he's trying to protect the American economy, but at the same time, that's causing a problem for most of the companies, even on the U.S. But this time, the market is in the green, 0.69% for the Dow Jones Industrial Average, 0.82 for S&P 500, and NASDAQ, the biggest gainer there for the stock futures, 1.03%. So for the markets, they will be expecting that there will be the ADP private payrolls report, which is due out later today, as well as the PMI index for the month of February, coming from the world's biggest economy. So at the same time, company news due to be reported, as it includes the Thor Industries, Abercrombie and Fitch, as well as Brown Foreman. So those are the company results that we'll be expecting to hit the market. Overnight, the three averages, they closed lower. That was on Tuesday. And then finally, for the Asian markets, we see that the Asian markets mostly higher, and this is because of they're assessing the GDP reports as well as inflation outlook from the world's second biggest economy, that's China, which has already said that they're expecting that the country's inflation, they're targeting around inflation to be around 2%, and then setting a GDP growth target for 2025 at around 5%. So that has made a positive impact across major markets on the Asian continent there. If you can take a look at what China's close for Wednesday is, mostly in the green. So that's a wrap for the markets, both for the close of Wednesday and at intraday.
Thank you so much, Anita.
Pleasure.
All right, now let's get to the African continent and start with Zimbabwe, where that country is joining other African nations to explore nuclear power as a way to help solve chronic problems with electricity supply. Demand for power continues to increase on the continent, and that's because of growing populations and economic expansion. The only African country currently producing nuclear energy is South Africa. The French-built Ebrd plant near Cape Town, with 2 frame-tone reactors and just more than 1,800 megawatts of generation capacity, has operated for 40 years. And officials have said that Russia will work on an expansion of that power station and possibly on the construction of new reactors elsewhere in the country. Eskom, South Africa's state power company, says that it's reconnected Unit 2 at Ebrd to the national grid on December 30 of 2024. We're still in Zimbabwe. It's local workers there. They are asking the National Social Security Authority to consider processing early payments for workers in the wake of rampant job cuts. According to the International Labour Organization, the unemployment rate in that country is about 20%, with records showing that formal employment has been depleting over the years, leaving many citizens in the informal sector where salaries are often low. Despite government efforts to ease the situation, formalization continues to spiral out of control, creating untold carnage, which has forced several companies to fold operations, leaving many Zimbabweans jobless. We leave Zimbabwe to Egypt, where the ministry has invited international companies to bid for 7 undeveloped fields in the Mediterranean Sea, 3 offshore exploration areas in the Gulf of Suez, as well as 3 onshore exploration areas in the Western Desert. This round of open blocks licensing program will be open for 2 months from March 2 to May 4, 2025. The opportunities will be available through the Egypt Upstream Gateway online platform, and according to the ministry, this forms part of its strategy to attract new investment into the upstream sector, increase crude oil and gas production, and enhance sustainability in the industry. We're still in Egypt now. Its non-oil private sector, it continues to trend in the positive trajectory in February, reinforcing the growth momentum that began at the beginning of 2025. According to the latest Purchasing Managers Index report from S&P Global, businesses have experienced a steady rebound in customer demand, marking the first consecutive improvement in market conditions in more than 4 years. Despite stable production levels and a reduction in workforce numbers, the surge in demand led to a significant rise in purchasing activity among non-oil firms. The PMI, based on a survey of purchasing managers, highlights this trend as a key indicator of improving sector performance. And then to South Africa, where residents in Wanshe have a month to declare their illegal electricity connections without facing any penalties. Well, the Swanshe municipality says it loses billions of rands every year because of illegal connections, especially in township and informal settlement. In a recently released statement, the municipality said that it understands sometimes the illegal connections are not done out of malice, but because of rising costs of living. The capital had a similar program in 2022 where thousands of residents and businesses came forward and were assisted with connecting legally to the municipality's grid. Municipality spokesperson Zonke Malagu has encouraged residents to take up this opportunity and avoid disconnections in the future. Customers who have tampered with their electricity meters are invited to declare to their customer care centers or electricity departments, and thereafter they will be issued with a form for their meters to be normalized and be exempted from paying a tamper fee. Well, similar problem in Ethiopia, where Electricity Unity has announced that property theft and destruction worth 50.2 million birr occurred in the past 7 months in the current fiscal year. In a statement released on March 3, EEU states that the reported losses resulted from power and transformer theft, electric line damage, cable theft, and other infrastructure-related crimes. The institution is also claiming that in some cases, employees were prevented from carrying out their duties. According to EEU, 163 cases of power and infrastructure theft were recorded during the period, and the institution states that 11 of these cases have resulted in court verdicts, with 13 defendants sentenced to penalties ranging from 2 months of simple imprisonment to 10 years of rigorous imprisonment, along with fines of up to 50,000 birr. Let's move over to Ghana now, where the governor of the Bank of Ghana, Dr. Johnson Asiama, has announced that individual decisions of Monetary Policy Committee members will now be made public after each policy meeting. This reform, revealed during the National Economic Dialogue held in Accra, is aimed at increasing transparency and restoring public trust in the central bank's decision-making. Dr. Asiama notes that past MPC decisions were always presented as unanimous, despite the presence of diverse opinions during deliberations. Moving forward, Bank of Ghana will publish the voting records and justifications of each member in national newspapers the day after the MPC meeting. We're still in Ghana, where the returning president, John Dramani Mahama, has announced his government's intention to resume efforts to establish a national airline in partnership with competent partners. Delivering his first State of the Nation address since his re-election in December, he said that they will reopen a transparent expression of interest to invite competent, established partners to work with them to establish a national airline. And they believe that an efficient national carrier can help reduce fares on routes where external carriers are currently enjoying monopoly. And still in Africa now, the Ethiopian Railway Corporation and the Korea Railroad Corporation, KORAIL, have signed a memorandum of understanding which aims at improving the overall efficiency and reliability of Ethiopian rail services. At the signing ceremony, Ethiopian Railway Corporation CEO Helena Belechu said that the signing of the memorandum of understanding represents an important milestone in strengthening the cooperation and laying the groundwork for potential future agreements. According to her, the partnership will bring tremendous benefits not only to the Ethiopian Railway Corporation but also to the Ethiopian economy as a whole. Let's leave Africa now and head to EU, where Germany in the EU is warning that the U.S. tariff on Canada and Mexico could threaten economic stability and risk disrupting global trade. The bloc is urging Washington to reverse course. Well, let's find out what else they are saying about this with Chiponda Chimbelu. Hi, Chip. Good afternoon and welcome to the program. So what else is the EU saying, and what I know they did also threaten that they will also react or retaliate. So what else are they saying about all of this?
Well, here in Europe, there's, of course, a lot of concern about supply chains and global trade. And the European Commission said that the tariffs on Canada and Mexico, which took effect this week, threaten supply chains, investment flows, and economic stability. Now, both Canada and Mexico are economic partners of the EU. And last month, the bloc announced that it would strengthen trade relations with Mexico, where, of course, European manufacturers, especially car makers, have production facilities. So while the current tariffs are targeting the U.S.'s neighbors, they are also hurting European companies, and the tariffs could cost the auto industry alone billions. And sometimes, of course, car parts travel between the U.S.-Mexico border and also the U.S.-Canada border several times during production. But of course, Brussels is also looking with concern to Trump's 25% tariffs on steel and aluminum exports to the United States. Now, those are scheduled to take effect on March 12, and they will affect European exporters. So Brussels is, of course, planning a response, Ini.
Yeah, I wonder what that response would look like. But how prepared is the EU actually? Because whatever decision they make could also have consequences on the EU economy.
Well, Ini, before I get into that, it is worth noting that for the EU, the U.S. is its leading destination for exports, and the United States is the second biggest source of imports to the European Union. So there is a lot of harm that these economies can do to each other with tariffs. And that is why we've seen European policymakers stress that point and, of course, focus on potential negotiations. But, of course, that could be changing. There is that disastrous exchange between U.S. President Trump and Ukraine's President Zelensky that happened in the Oval Office last Friday. And of course, the White House's announcement this week that it would pause all military aid to Ukraine. Now, if we see Washington pile more pressure on the bloc with tariffs, we could very well see the EU deploy its anti-coercion instrument. Now, that is a tool that has a so-called trade bazooka that would have a wide range of retaliatory measures, including quotas, tariffs, and foreign investment restrictions. And it was actually created after the first Trump administration, but it has never been used.
Well, I do hope this would be the first time we will see that bazooka being used, because, I mean, the impacts obviously will spill to almost every country in the world. But let's see what investors are doing. I know this morning, based on the perception that President Trump may be easing a bit on the 25% tariff, stocks were looking higher, but how are they looking intraday?
Yeah, I mean, there is a bit of a turnaround from yesterday's sell-off on European markets. And of course, European markets are recovering some of the losses they had yesterday. The Euro Stoxx 600 is actually up 1.3%. And it is because of the news that President Trump could potentially ease some of those tariffs on Canada and Mexico, like you mentioned there. And Germany's blue chip index, though, the DAX, is soaring. It is up more than 3% today. And German stocks have really been boosted by plans by the country's most likely next chancellor, Friedrich Merz. Now, he has announced plans to invest 900 billion euros into defense and infrastructure. But of course, it's also worth noting that while markets are cheering that news, there are no guarantees that it will get through the Bundestag because, of course, despite the fact that it has support of the conservatives and social democrats, the plan does need 2/3 of parliament to back it. So that is where the Greens would have to come in. They need to support that measure. But of course, it looks like it will likely go through. So fingers crossed, and markets at least are cheering that today. And that's why we're seeing the DAX being up higher than 3%.
Yeah, well, at least it's not just the defense stocks that are doing well intraday today. We hope it sustains. Thank you so much, Chip, and enjoy the rest of your day.
Likewise, Ini.
All right, so it's good to see that we're a bit of cherry news. I don't know how solid that news is, but at least we saw the European stocks a bit higher today, or much higher, more than 3%. But let's find out what's happening to crypto. If perhaps the news that President Trump might pause on that 25% tariff, if it's also helping the crypto market, even though I see it at lower than 90,000, Ladi.
Yeah. It impacted the crypto market too.
Oh, okay.
I feel like investors must be very dizzy, you know, right now, what we're seeing play out with most of these markets. Trump says tariff, markets go down. Trump says maybe no tariff, the markets go
Ladi,
up.
please, let's state this.
Right.
President Trump hasn't said he's going to ease.
No, he said maybe.
Did he say maybe,
There's
or those around him?
No, it's the perception.
Exactly.
At this point.
Let's be clear on that.
Yes.
President Trump hasn't said.
He hasn't said that. No.
Yeah.
No.
So it's just, you know, conversations around,
read, you know,
in between body
exactly.
language. You know, we do body language in Nigeria.
Exactly.
Yeah. So let's be clear.
So that's why we're seeing this green now, and which could change
at any point in
time.
Mm-hmm.
Yeah. So there you have it. It's mostly green on the screen with Cardano trying to get back above that $1 level. Let's get a check on how the market is, how investors are feeling. I'm talking about the fear greed index. We know we've touched extreme fear, and yes, it's still there, still extreme fear right now. For the longest time, we've been in greed, but the markets are very afraid right now. Let's look at the top headlines now. We see Binance P2P, that the cash zone, that's going to be shut down. The cryptocurrency exchange reportedly announced that they're shutting down its P2P cash zone feature. That's March the 31st, ending a service that let users trade crypto for cash through registered merchants. In multiple posts on X, users from different regions shared notifications from Binance stating that the exchange made the decision to wind down the feature so they could focus on their core services and continue to develop and innovate solutions. Then we're also seeing Coinbase CEO, he's meant to headline the White House Crypto Summit. That's Brian Armstrong. Set to highlight that, attend the high-stakes crypto summit at the White House. And this isn't just another meeting, according to some people. It's a significant gathering that could shape the future of cryptocurrency regulation and adoption in the United States. Then social media on the line now, Alexis Ohanian is eyeing a TikTok acquisition in a move that could redefine the future of social media. The Reddit co-founder has thrown his hat into the ring to acquire TikTok, but this isn't your typical tech buyout. Ohanian's vision is far more ambitious this time, to bring TikTok on-chain, leveraging the power of blockchain technology to fundamentally transform how the platform operates. Will be interesting to see, because a lot of people making content on TikTok at this point, will they take it on the blockchain? Let's bring in Olumide Additional now, financial market analyst. Hello, Olumide. Hello, Olumide.
Yeah, good afternoon, Ladi.
Good afternoon, Olumide. Great to have you. So everything is happening. Everything's happening so fast. you know,
Yeah.
in the markets. You hear tariffs. Next thing, everybody's scampering for protection. Markets dump. And maybe some feel like the tariffs might be, you know, they might calm down
Yeah.
on this tariff wars.
I think
I
it's
was
not
seeing green.
I think it's not just the tariffs. I think it's the inconsistency of the president of the largest economy. I recall that just before he came to power, Bitcoin was stated at all-time high of 109,000. And right as we speak, despite the fact that it has risen by almost 8% to the 90,000 mark once again, you could see that the greed fear index, there's so much fear. And that really tells you that it's really a worrisome state of the crypto space because the president has spent about 9 weeks in office and we've had $1 billion liquidation about 8 times in those weeks. And also, you look at the fact that Ethereum fell to yesterday fell to its lowest level in about 2 years, below the 2,000 mark. That should concern, despite the fact that we're having a crypto summit, despite the fact that he announced the crypto strategic reserve, because investors don't like inconsistencies, investors don't like up and down statements, investors like clarity, investors want to understand what they are putting their heads in. And it seems like the president's family also has advantage because prior to the announcement, we've seen that through on-chain analysis, we've seen reports that certain information have been taken based on those, but still allegedly, that has also eroded the market integrity of that space. So it leaves the crypto community quite disturbed. Although, like with today's reaction, we're waiting if tariffs on Canada and Mexico will be rescinded. But the market now is looking like it's going back to the midday low as we speak.
Right, and talking about what we're seeing play out in most of these markets, it seems some people have some kind of information and they front run. Most of these markets could maybe 2025. Could we see the biggest insider trading scandal ever with what we're seeing play out with most of these markets?
But insider trading is not illegal in the crypto market because it's not a regulated space, and information is not as centralized as a lot of people put there. But there are moral and ethical standards that definitely would be highlighted in the aftermath of President Trump's presidency. But I think it still means that we need to be very cautious. Bitcoin has never been this parabolic since COVID. So it tells you that investors will definitely be on the hot seat this year.
Right. And what do you think should be the next action for an investor that's tired of all this volatility? Is it better to just take cash and sit on the sidelines?
I think the answer is follow the rule of Warren Buffett. Warren Buffett kept about over $340 billion on the sideline cash equivalent in treasury market because, Ladi, it seems like President Trump, this is not the end of the drama. We still foresee a lot of downturns, and it seems he wants a soft recession based on many market pundits, and definitely that's not good for Bitcoin. So I would only advise that invest what you can afford to lose, and if you have invested early, why don't you wait and allow it to ride? But for new beginners, I think it's better for them to wait and see how the market turns out to be.
Wait and see. Olumide Adesina, thank you so much for giving us what to expect in most of these markets. Thank you.
Thank you for having me, Ladi.
All right, so there you have it. I know you like Korean drama, but I feel this drama we're seeing so far, K-drama has nothing on this one.
I wanted to treat you to some insider information that could help you and your crypto community on investment, but for that, you say, I'm going to keep my information.
You're going to keep it?
Yes.
Or maybe we'll see in a K-drama at some point.
All right, so that's it on the program. Thank you so much for being a part of Business Incorporated again today. Do remember that we start off again tomorrow at 10 a.m. We always make sure we get the most relevant information for you and your money right here on our Business Shoes. I'll see you tomorrow.